Welcome back, everyone, for another Redbelly Insights. This is episode number 16. I've got a screen share here because, first of all, we're just going to go through some things that we've had going on in the community. And part of that is these polls and just some items that we've been sharing more related to news. I'll talk to you about that soon. And we've got a special guest on today. It's Vander Donk from the Australian Bond Exchange, part of the exciting project Acacia. So you'll be seeing much more of that very soon. But just to begin with, I just wanted to highlight here that in terms of the Redbelly network announcements Telegram, we ran this poll which said, if you could tokenize any real world asset next, what would it be? We had gold, real estate, fine art, and private equity, and it was really interesting to see the results. A lot of people went for gold. Folks like Peter Schiff and the various gold bugs that are out there would have been very proud of this. Real estate came in a very close second at 35%. And then so there's definitely people that are keeping an eye out on the news in terms of what is being spoken about with tokenized stocks, tokenized private equity, etc. So really interesting stuff. Nearly 200 people voted on this one. So just wanted to share that. The next thing is all on the topic of what we're calling newsjacking. And we see really interesting stuff going on in the news. And we want to highlight it from Redbelly. And just to share with you that one of the things that we just shared earlier this week was that there are articles talking about $100 billion worth of inflows into blockchain rails. Now, what we're trying to do is build the rails that run on those. So banks are investing in tokenization, custody, and settlement layers. Redbelly's Bitcoin liquidity detailed in our white paper, which we spoke about last week in the Redbelly Insights episode number 15 with Matt Hale, head of product. So that was spoken about there. So really interesting stuff. We have this as a Twitter thread. The report that we highlighted, there's a news article that goes with that. It talked about 345 deals since 2020 that focus on tokenization, digital asset custody, etc. So you can read this tweet thread. We also put it out on LinkedIn. Another example of this newsjacking sort of thing was from last week, where we highlighted that ETFs are definitely the access point, but we are the rails underneath. So that was with regards to an SEC article that they're now accepting in-kind creation of ETFs. So the ability for ETF providers not to have to swap out to cash to convert crypto, it means lower cost, lower slippage, and much more institutional comfort there. And all of that is really important because as institutions come in, we know that they're going to need other things like collateral yield, settlement of tokenized assets and RWAs. So that's what we're built for over at Redbelly. And the final one, and there's going to be more of these, you'll see these at least twice a week. This one was on Ethereum and how it's had its 10-year anniversary. Public holding of ETH is growing and growing. And just how ETH is today's story, which is great, but RWA and tokenization is tomorrow's. And whilst we want to see more growth in the overall space, we feel that compliant ways of doing that are the ways to go, especially when you see more instos coming in. And we'll have that as part of the conversation today. All of these newsjacking items, we will be running some sort of competitions pretty soon on this. But if you're interested in getting involved, we want you to be posting these sorts of stories out there as well, commenting on the ones that we put out and highlighting in the communities anything that you are seeing that is interesting, relevant, etc. The final piece, which is not newsjacking, but very important to highlight, which is this letter to the community from Alan, our chairman. You can see that here. It's being put on a blog. It's here on Twitter. It's also on LinkedIn. He highlights that over the past year, he's been watching three threads converging: the rise of AI agents in finance, the growing demand for real-world asset tokenization, and the regulatory push for accountability in infrastructure. All of those things are what we're going to speak about over the coming time. And today we actually get to bring on, let me bring him up here, Vander Donk from the Australian Bond Exchange. Michael, thank you so much for joining us. How are you today?
I'm very well. Thanks for having me.
Great to hear. If you could just start off with an intro for folks that might not know who you are, if you could just tell us a little bit of background about yourself and what you're doing at Australian Bond Exchange.
Yeah, thanks. Yeah, so the Australian Bond Exchange has been around for about 10 years now. I was one of the co-founders. Prior to that, I was working with Dell EMC, traveling around Asia, doing training for cloud, data science, AI, that kind of stuff. I've been playing with technology since the 80s when my brother handed me his ZX80. So basically a 1K machine you plugged into your TV, and I've been playing with technology since then, and playing with new and interesting technology. So I still have Bitcoin that I minted on my own laptop from way back when. So I'm always playing with what's new and exciting, and pushing boundaries of what's possible.
Very interesting stuff. I bet you have some really interesting war stories. And before we get into the further parts of the podcast, getting into the detail here, I just need to describe that this AMA is for informational purposes only. Redbelly Network is a blockchain infrastructure provider and does not endorse or promote any financial products or investment opportunities. All opinions expressed are those of the speakers. Please do your own research and comply with applicable laws in your jurisdiction. Thank you, everyone, for watching. Interesting stuff on the background there. So how long ago did you read the Bitcoin white paper? Like how soon after it came out did you see that?
I don't. It was really early. So it was probably about a year or two after it had come out. I started playing with it. But again, I'm minting on a laptop, so you haven't been able to do that for a decade now. So
amazing stuff. And being co-founder of the Australian Bond Exchange, some people may, they may have heard of, because we have a global audience, so people would have heard of the ASX, the Australian Securities Exchange. I used to work there. They may be aware of your traditional exchanges like the NASDAQ, the New York Stock Exchange, etc. What is the Australian Bond Exchange? What does it do?
So it kind of does what it says on the tin. We here in Australia, the market is split somewhat, and to a large degree the rest of the world, where equities is on traditional exchanges, so like you said, NASDAQ, ASX, etc. But bonds are traded typically in a wholesale-only market. So it's very difficult for retail customers like you, me, your mother, your father, uncles, aunts, all those kind of things, to get access to the bond market. So the Australian Bond Exchange tries to bridge that gap. So we do a lot of work in the secondary market for retail, and we also do a lot of stuff in the primary market on wholesale. And we're trying to bridge that difference to bring a clear and transparent access for everyone into the bond market. Because bonds themselves are kind of the traditional security. They've been around for centuries. They're kind of a stock standard, boring as hell. Everyone knows them. Very few people, at least in Australia, invest in them. But they are the kind of the go-to if you want a stable security. So we're trying to bring that to everyone.
Going all the way back to the days of like the Dutch East India Company, and hundreds of years ago, the first like stock trading type certificates, bonds, very much involved there. But you're right, it's not been an accessible thing. So it's interesting that first of all, you guys have already been doing this in terms of trying to provide access, which is a big ethos of blockchain. But for your role, let's get into a bit more steering towards Project Acacia. How do you see ABE's role in Australian capital markets today, and also how does that connect with the vision behind Project Acacia?
Got it. So, like I said, Australian Bond Exchange kind of has the catchphrase "access for all." Right. So, bringing the information symmetry across the market. So, with the bond market, the traditional bond market is very opaque. It's all bilateral trading. So, there is no central repository for assets. No one knows who owns what. You don't have clear price signals. So you bring up your broker and you'll get a price, and you have no idea if that's a good price or bad price. If you ring up your ASX or your NASDAQ broker, you can then go on the website and say, okay, what kind of price did I get? Right? It's all bilateral, very, very opaque. So we're trying to, and we are and have done a lot of advances to change that and bring more transparency to the market. So we publicize our trade as if it's a lit market. So we show that to the world. Very few, if any, other bond brokers do that. And again, Project Acacia brings inbuilt in that a bunch of those advances. So we can do additional things. So rather than presenting only the price, we could present partial pieces of the trade to different parties. All right. So with zero knowledge proofs, the regulators can come in and have a look. Okay, is this trade? Who did this trade? When no one else can see that. Right. So they don't have to ring us. They don't have to get information from us. They can go direct. Right. And these kind of technologies can help that transparency and help bridge that information gap in well-defined and well-known ways.
It's really interesting because, as you said, like the bilateral kind of trading, maybe many people don't realize that unlike stocks, which trade on centralized exchanges traditionally, there is this concept of over-the-counter OTC trading where it is that bilateral. Like there is no just central information area. And even if there was something, it doesn't have the benefits that come with blockchain, like zero knowledge proofs and being able to just prove and show things only on certain transactions without having to reveal everything. So it's that privacy but programmability component that's really interesting. And you've already kind of mentioned these things, like that corporate bonds are traditionally like harder for in retail investors to access, opaque pricing, slower settlement cycles. The frictions that you guys are solving for, what do you think, what frictions do you think that you've been, say, most successful in solving? And where do you think that something like Project Acacia helps to push that further because we're doing it with blockchain rails?
Yep. So one of the big ones, I'm a technologist, so I worked a lot in finance, but I'm not a banker. I'm a technologist. So when I first got introduced to bonds and found out that the settlement failure rate is around 2%, that's really still shocking to me. So that was one of the first problems that we kind of got a solution for. Built in-house, our settlement, I can count the number of settlement failures we have on a single hand. And every single one of those hurt me. So, settlement in a T+2 market, when no one knows who owns what, is very, very difficult to solve for, hence the 2% failure rate. If everything's on chain and everything is atomic in terms of settlement, suddenly that disappears. Suddenly entire back office teams are no longer needed to try and solve for those 2% failure rates. That's hundreds of millions of dollars in trades that are failing every day. Right? This is not chicken feed. The second part of that we've have solved pretty well is the access. So when we first started, the traditional, if you wanted to do any kind of banking 10 years ago, you go to a bank, you want to start a bank account, or come to us and become a client, because of the KYC requirements, etc., it would take about 2 weeks or longer to go through that process. The team has done a lot of work to bring that down to hours. Right, so a new client can hit our website, sign up, in hours, be trading. Again, online. So bringing that access to make it easy for people to do the trading, to be able to do what they want to do and get access to the assets that they want to.
Brilliant. I think, even without blockchain, it sounds like you guys were already pushing the forefront of what technology, as you said, you're a technologist at heart. So you see, we're similar to myself here, and Project Acacia is something where it gets to showcase the innovations that blockchain can provide. But even without that, you were already pushing the boundaries of what could be done, because it's just not good enough. Like it adds up. It's 2% to some people might not sound like a lot, but when you add it all up, that's billions, millions of dollars. Mm-hmm. So great to see that you were already doing that, and this Project Acacia and blockchain just adds further to it. Now, as someone with your background in AI, data science, large scale systems, even, what parallels do you see between, say, re-engineering market infrastructure and the kind of systematic optimization that you've driven in other industries? How much of Australian Vault Exchange's DNA is about technology versus, say, market structure?
Yeah. So we are, again, we're a bond exchange. We work in the bond world, but we are really much a fintech. We very much focus on building the technology to be able to do the transactions for the bond market. So the best example I can give in terms of the parallel is the iPhone. Basically, you have an iPhone that has, if you think about it, it's its own product. If you step away from its own product for a bit and you think about it as infrastructure, you can start to see that things like Uber, TikTok, Tinder would not exist without the infrastructure of the iPhone, without your mobile phone, right? Many other companies just would not exist. Things we're used to that we use every day wouldn't even be conceived without that infrastructure piece. So when we think about the bond market, which really hasn't changed much in 100 years, yes, we've brought technology to make it easier in some degree, but it's still very much the same processes and procedures that have been used 100 years ago. We've just moved it from paper to technology. Stuff like blockchain, these kind of advances and Project Acacia is a good example of that, can bring re-engineering of the underlying infrastructure that can make a difference, right? And change the way an industry works. So I talked about Uber. The taxi industry was siloed. If you wanted a taxi, you had to ring up your taxi company, and now you go to Uber, and that kind of have centralized that distribution of taxis, right? Similarly, if you look at efficiencies, right, with ad networks, right? If you were trying to do advertising 20 years ago, before Google, you'd have to ring up all your newspaper and your radio station independently. Now you just go to Google and pay them some money, and they will distribute to your target audience directly. Right? That's building that infrastructure, and in some cases, not necessarily know how or where it's going to be used or what the advances are going to come from that. Because I'm sure Apple didn't realize what they were building when they built the iPhone. They might have had some ideas, but they didn't really realize where it is now. So
it'd be interesting I haven't seen it, but it would be interesting to see if they had any kind of projections of what, could be done with all that stuff. And you're right, like here's some cool technology. It becomes the rails. We want you to use it. It was really interesting because I remember, I'm old enough as well to remember that before that we had all of these different types of phones and people cleverly having this sort of way that the phone flips or sort of innovation with the camera that pops out and stuff. And when the iPhone came out and it was just such a game changer, the whole screen is your device or your keyboard. It changed how everyone else started looking. So there was a real groundswell sort of moment, and it changed the world, no doubt. So I think that, blockchain, if we can get it out the right way, is going to have that sort of thing as well. One of the goals for Acacia is this concept of testing end-to-end on-chain flows for securitization and for payments. How do you think that real-time transaction capabilities for corporate bonds could change the dynamics of issuance and, as part of that, investor confidence?
Yeah, so traditional capital markets, it's T+2, so settlement in 2 days. So that brings in a whole bunch of side effects that people just ignore, right? One of those is the collateral is the margin that needs to be raised from all the brokers to cover what happens if someone fails delivery, right? To have that protection. If we move to a T+0 real-time atomic settlement, suddenly all that billions, and it's billions of dollars, can be freed up. And it also makes it possible for the market participants to be much more dynamic in how they trade. So instead of having to, the market's crashing, let's get out, and they're selling in 2 days' time, they can go, the market's shifting. I want to get in front of the wave. Let me do the transaction today, and I'm on the wave, right? And that will make a big difference to the way the market will work, right? And part of the thing that we're playing around with Project Acacia is what other effects can come out of doing that, right? If we know who has the bond, we can do real-time settlement. we can potentially do other things. Yeah. So we can do communication with the owners, right? So right now, if an issuer doesn't know who holds their bonds, it sounds weird, but that's the case, right? It takes weeks or months to try and get a vote through, for example, for an issuer. If they need to change the covenants on the bond, it takes a lot of work because they don't know who owns it. So they've got to communicate with all the 200 odd custodians who each have sub-custodians who might have sub all the way down to try and find who actually holds the bond so that they can vote. And that's, a simple thing is suddenly really, really, really simple on a blockchain and currently really, really, really hard.
It's really interesting because like people, if you were not in this space at all, just given the pervasiveness of technology, the internet, AI, and all these things, you'd think that, oh, surely there are quick ways to do things. Deal with any government department and people would quickly soon realize just how slow things can be in a world of fast-paced change. We somehow managed to get by on these important infrastructure and systems, whether it's exchanges or like government or other corporate systems that are just relying on a lot of slowness there. But you're absolutely right. Like I remember Arturo when we spoke about things like atomic settlement, like what that means, the types of things that you couldn't do before. Like if you wanted to purchase a round the world trip and you could only have these certain areas or particular flights. It's an either or. With blockchain, you can have it as either the whole thing settles at once or not, because the risk is you could have your 10 different hops. You might get 9 of them and purchase those tickets, but the 10th one fails because of that lack of atomic settlement. Being able to know, you just miss out. But using it to your point, like being able to just immediately know because it's programmatic, that we have sent out all the information to people, or everyone has access. All of these types of things are really cool experiments that will no doubt come. We've got the main thing of securitization, with you guys being the exchange, and then other parties either buying that or producing the investments that go into the creation of the bond. I think it's really interesting to see what we can create there, because it's not just like what's on paper that DFCRC will announce. And I don't know if they've updated the page yet. Maybe they have. I know they were working on that. But it'll be all of these other extra things. Just on that point, do you have some other ideas of things that, just ideating here, that you'd love to be able to see, given, projectification and us like working together? What are some other things that you think could be interesting for the bond markets that, is that what automated or if they're programmatic, would be better than what we've got today?
Yep. So I was looking at a graph today about the automation of markets. So, equities markets, automation, most trading is, 90+% or 90% of trading is done by robots now in some degree. And it has been for years. The bond market is somewhere around 10 or 20%. Right. On that same graph. Right. So, and part of that is because of the way the market is built. Right. So, there is some issues with having a fully automated market. Right. We've got many examples of the equities market having a large flash crash or a whole bunch of small ones. Right. Again, that's part of the problem. Yeah. But nevertheless, there is a lot of value that gets pulled out of that, or that gets built from that, of having the market more dynamic, more liquid, right? More available. So that's one of the things that we're going to exploring, and also we're starting small.
Yeah.
Just we don't. If we build the infrastructure right, then we will be very joyous in 2 or 3 years' time about how many people are using it in new and interesting ways that we didn't think of. Right? There's many more very, very bright people out in the world that if you give them the right tools, they will take it and do stuff that you wouldn't even think of. So I'm looking forward to that.
We started off with like the whole blockchain space has been about Lego blocks, and arguably as well the things that you've been creating before Australian Bond Exchange is getting involved in blockchain is also Lego blocks. And it's piecing these things together that someone else is going to come see it and go, I really like that. I can build further applications, just like the iPhone, like you said before. So
Yeah.
very, very cool. Now, in terms of institutional adoption and those folks that will build on further, we've seen them leaning into tokenization, the big players, whether it's the BlackRocks, Franklin Templetons, and all these other corporates that are looking for that, or even just to get into of some Bitcoin or Ethereum and follow this as a way to modernize their own structure with tokenization. From ADE's perspective, what do you think institutions are most looking for? Is it efficiency gain for you? Do you think it's transparency, risk management, regulatory comfort? And how do you position yourself to deliver on those expectations? What are your thoughts on that?
Yeah. So from my perspective, I'm not sure what most of those companies are getting in for. Right. A bunch of them are probably getting at the bandwagon. That's okay. Right. That's, bandwagon's a nice place to sit and have a gig. But we're doing it for the innovation piece, because we see the inefficiencies in the market, and we can kind of look over the fence at equities and go, oh, look how efficient that is. There's problems with that as well, but we can use that as an example, right, of how we can make changes, right, for the benefit of everyone.
The equities side of things, like we have seen it, unfortunately, here, and I'm sure overseas we're more attuned to it here. Whether it's not even a flash crash, but just say mistakes that happen, whether human-led or even machine just improperly coded. I think the recent one was the let's call it a misannouncement on a TPG that wasn't the right TPG company. I'll leave folks to look that up and the consequences of that. But these sorts of things, I'm not saying that, blockchain solves exactly everything, because it's still a programmatic thing, but at least if blockchain, say with AI, could be combined together to add further checks on top of the mainly human ones that we have right now. So it's an interesting, compare and contrast. Once this project goes out and we can see how this works, this is going to be a nice reference use case. But it'll be interesting to compare and contrast, like the old world versus what we're painting as a future vision. But
it's right.
Talking about, let's say, interoperability next and market design, one of the things that Project Acacia highlights is the importance of the interoperability part, the different asset types, the payment rails, even the CBDC pilots that they've done in the past. But how do you see your platform, so this Australian Bond Exchange platform, fitting into a world of, let's call it, composable finance? And what are the next technical or kind of market milestones that you'd be aiming for from this?
Yeah, so capital markets in general have always been chasing safety, liquidity, yield. That's kind of the big three. By combining those with transparency on a blockchain, right, with the familiarity and the history of fixed income, we're offering all those three at once. Right. So when you look at things like Ripple or Circle that prove that there's a demand for digital settlement, right, but they're in a largely unregulated or offshore environment. So we're taking the next step and bringing it into a regulated environment. We're heavily regulated. We're a financial services company here in Australia, with RBA and ASIC engagement. Right? We're building that to be interoperable with everyone in the market, to kind of build that infrastructure so people can go and take it and build what they want to build on.
Sorry, I just had some guests walking in. Arturo, lead of Project Acacia, there in the background. But what is interesting is, what you mentioned there around the types of things that we can build and to be able to take further with this kind of composable finance concept. There's a whole lot more that we know that we'll see. We're excited as well to see the other projects, the other 23, because it's 24, to see what they're all doing, because we're all going to learn from each other. So there's going to be some really interesting things coming out of it. But when it comes to, let's talk about the next part being standardization and regulation. Tokenized markets need more than just good tech. They need standards, governance, regulatory alignment, all these, things that people don't typically, that they maybe get into crypto because of the FOMO side of things. It's maybe less on this side. A few of us, like yourself, like us, we're interested in that innovation side of things and also this. But what role do you see the Australian Bond Exchange have in helping shape those guardrails, especially given Australia's position in the global market?
So, as I've said before, the bond market is, stuck in history. ABE is trying to disrupt a bunch of that, right, to bring it kicking and screaming, if it will, into the present day, right? And we need to do that because it's a very stable market, and part of the, as much as I may complain against its delayed uptake of technology, that's a feature.
Yeah,
right?
important for people to remember.
It's fixed income is about safety, is about protection, right? So, not chasing after the newest, biggest thing. So, this is the as much as I rail against it, we need to do that, bring it into the present day with the regulation, with the full knowledge and weight of regulation and standards that everyone can agree on, right? To be able to bring that forward and to bring that safely to reality, right? Because again, there's a whole bunch, and we've seen it in the or I've seen it in the crypto markets for many years. People bringing out stuff that they think will be the best thing, and then a couple of months later it's gone. All right, rinse, repeat. So, and part of that, I think, is not that their idea was bad, right? Some of them were, but that they didn't necessarily approach it understanding that regulation is a real thing, right? And it needs to be there as much as we may hate it.
I think it really aligns well with Redbelly's view of things here. And just to take a step back, you mentioned big names like Ripple and Circle and these others. And sure, they started off as being blockchain native rather than traditional finance native. But given let's just talk about stablecoins, for example, more than 50%, we've had that flippening of, it used to be majority was retail investors using stablecoins. And pretty quickly, as soon as they got in, it's now wholesale. It's corporates that are really the ones that are the biggest in terms of stablecoin usage. So with that in mind, we know that corporates need in traditional finance the guardrails, the infrastructure, all of these things like regulatory compliance checks, KYC, the things that Redbelly is built for and the things that you guys are used to. So I think it's a very important message to throw out there into the ether that this is, if the future is heading in that direction, the Wayne Gretzky quote, skate to where the hockey puck is going. We are doing that by providing, with yourself, with Fascinara Capital, with Fireblocks, all these groups coming together. So I think it's just adding further to your point that, this is, there are good reasons why the convergence is happening now. Would you care to add anything further?
Just to double down on the point, I think the regulation is needed for the retail as well, right? Because there is I can pull up. Give me 2 minutes, and I can pull up the latest bad coin that is going to be a Ponzi scheme. That's going to just be the next rug pull. It's like that's not good for anyone, right?
It's interesting because these things were used to criticize, like there are websites out there, one of which is called Web3 is going great. It's an ironic one because they don't think the Web3 is going great and they think they're doing a job at kind of tearing down Web3 blockchain crypto. But in fact, they're just showing to the pragmatic, the real visionaries in this space, these are the things to avoid. And we're building in a way that can help avoid that. Because if these things just use blockchain in the way that it can do things like provide, like, okay, you're in a DAO and like who is like if you're promised certain things, it could be written into the smart contract, for example. There are things that are being done that weren't done with ICOs the previous years. So anyway, going back to bond exchange, secondary market liquidity. Now, people maybe they know a bit about the bonds. They've learned more from watching just this first part here. But a key test for tokenized bonds is whether or not they can actually trade and not just get issued. So how do you guys think about secondary market design, liquidity provision, and ensuring that these instruments don't just like sit idle. What are your thoughts on that?
Yeah. So our thoughts, or my thoughts specifically, are we need to make it independent to the end user. So the end user doesn't right now. The super funds, the managed funds, etc., don't really care that the bond market where their bonds sit, which custody holds that bond, right? Most of them probably don't even know, which is fine. The market works, right? They talk to their broker, they talk to their connection, and say, "I want to trade this." It gets traded. This is exactly the same. While the market itself gets a whole bunch of benefit, and some of that benefit, or a lot of that benefit, can flow through to the end consumer, the super funds, the mums and dads. It needs to be independent of that, or it needs to be obfuscated. No super fund will want to, very few super funds, I'm guessing, will want to go and have to build their own wallets and manage their own wallet and do all that kind of stuff. Right? It's required, but they're not going to want to do that. Right? So that from the secondary market perspective, we need to build it to be able to handle that feature, to be able to handle that seamlessly, regardless of where it's being held. So,
very good. I think we've seen that sort of thing where other sorts of assets get tokenized, and it's not this concept of, okay, well, now everyone in that existing ecosystem has to get their own wallets and stuff. No, it's obfuscated, like you said. The exchange takes care of that. We have great on-ramp and off-ramp services here in Australia and globally that can be used to help provide that. We see others just trying to even make it just easier for the onboarding and offboarding of people. And I think that as part of like the secondary market design is really key, because we've got this great new technology, but you could see it. Well, I mean, you and I, we've seen what's failed in technology over time, and it's not because the tech was bad. It was just not presented in a way that is easy.
mm-hmm.
So, a very interesting thing to highlight. And just the other thing, the reason why I asked that is because we see projects where, things may not move as much on the secondary market. So it's not for lack of sometimes like access. It's just like it's not designed to make it less of a thing that these guys have to worry about. Like if you just make the whole kind of process easy, there's lessons here for many other projects that are out there in the blockchain ecosystem. Now, another thing that's interesting to, especially for me, is like the data side of things. Data and transparency is really interesting in the blockchain space. Now, bond markets, as you've mentioned throughout, have historically been opaque, not very visible. With tokenization and platforms like Australian Bond Exchange, do you see a step change in the availability of data for investors? You slightly mentioned, like, say, regulators want to check, we could use zero knowledge proofs there. But availability of data for investors, how can we balance transparency with the needs of, say, issuers and, again, regulators?
So this is a big piece of what we're doing with Project Acacia, right? Again, yes, it's end-to-end transaction, awesome, but because it's on chain, you can now encode some data into that thing, and that data can be interrogated in a bunch of different ways. So I mentioned it earlier in terms of voting on a bond, changing a bond covenant, right? If that is on chain, that could be done in an hour or two. It's probably not, because no one's going to be sitting there waiting on their phone for things, but the technology is there to be able to do that. Great. The next step of that is, okay, the issuer now knows who their bondholders are. They may not actually know who the bondholders are, but they can contact them fairly easily. So the bond is coming up for maturity in 6 months' time. Who are the best customers for that issuer to get into the next bond that they bring out? Are current holders of that bond. So they'll be able to communicate directly with them with some kind of special offer, right? Again, this is to go to marketing, go to a direct to consumer ad network run by the issuer. That is now done where the issuer doesn't know who the holder is, but the holder can get access to the issuer. All right. They can potentially, from the bond, maybe there's covenants in that bond that say that the issuer needs to hold, a minimum of $1 million in cash. Maybe there's a smart contract in that bond that shows the current the current issuer's bank account when the person wants to go look, right? That stuff. And I'm just picking some of these things out of the air, right? Would anyone want that? Maybe, maybe not. I don't know. But it's now possible to do things like that, which just is fantastic. Absolutely fantastic.
Yeah, agreed. Like but prior to all of this, and this show, we've shown here that yes, there's a lot of opportunities, which is a great thing. Like if everything was already done and there wasn't much opportunity, that's also great, but we wouldn't have much.
It'd be pretty bored,
yeah, we'd be pretty bored. But like the whole concept of what you described there, like it reminds me of one of the earliest things and why we like blockchain was that whole fact that you could encode rules like this. So before you would have rules and regulations, and if you followed them or not, there's enforcement after the fact. Well, what if we just made it so you couldn't even do that? I remember that people got in trouble for letting wholesale products be sold to retail investors. Well, what if it was whitelisted and the smart contract wouldn't let you do it?
Yep.
Like, here's the thing, and they're physically possible. So we have a better world, and the possibilities of what that does. We're only two people here. Like these things that we could think about are far greater when you get the masses thinking about this. And that's what I hope to encourage from this today. We're doing another project with Redbelly where it's through Qatar. And it's something where, because there is visibility of what uni students, their credentials in terms of they're doing these courses. So the Ministry of Labour now will be able to, or whoever can see in real time, we've got this supply of knowledge and skills. The industries that demand this are needing blah or blah, A, B, or C, but you can do it in more real time. So all of these things that you can create when you connect the Lego blocks together. So this is really cool. You guys are tackling it for the bond markets. And I'm sure that hopefully from this, people reach out and maybe they have like other ideas. We can.
Yeah, I'd love to hear all the ideas that people have from listening to this, because we're not the font of all knowledge, so just bring it. Right?
Yeah, exactly.
All kinds of interesting stuff that can be done.
Exactly. There's a final question here I've got in terms of looking ahead, and then we'll get to like contact details and stuff. But if we, crystal ball, I hate doing this. There's no such thing. Blockchain, quantum maybe will invent that. Maybe the quantum guys in the emerging tech space will invent this. But let's just say crystal ball. If we fast forward 3 years, 3 to 5 years, maybe. What's your view on the end state for your patch, the bond markets? Do you see a world where on-chain settlement and tokenized issuance becomes the default? How do you position Australian Bond Exchange to be at the center of that?
So I'd love to see it major changes in the next 3 to 5 years, but I'm a bit of a realist, right? So the bond market moves pretty slowly. 2018, I think it was, CBA did the first on-chain issuance of a bond. I think that's the only one so far. Might be wrong a little bit with the dates, but it's kind of ballparkish, right? So it moves slow, and that's somewhat of a feature. But AB isn't just building a payments or exchange platform, right? If we do it right, we're building infrastructure that can drive the way capital markets run, right, into the future. So whether that's, it's kind of the same thing with taxis and Uber, right? No one could beat taxis because everyone was still thinking in taxis and the way taxis work. And then Uber came along and went, here's this new way, right? Is it really a new way? No, but they just enabled that functionality. All right. We're trying to do the same. So whether we get there or not is the experiment, and it's going to be a good experiment. So that's kind of what we're hoping for. That's
Very
what
cool.
We're working towards. It's not little baby steps, piece by piece, and this project Acacia with Redbelly is a piece of that work, right? To work out where the issues are and work out what the next step is, and start building some of that so it lasts the next 50 years or longer.
Well, as you said, it's a feature that it's been risk averse, and I would argue even Australia, just in terms of capital markets globally, has been more stringent on rules and regulations. So it's a great place, given that we've seen the Wild West of crypto.
Mm-hmm.
Now we need to actually build the frontier and actually have established things, have safety, because the Americas, that analogy, that they would never have grown into what they are had it just remained a Wild West.
Correct.
So it's absolutely necessary. So it's great to see. And I just saw the article here. Yeah, the World Bank chose CBA way back then in 2018 to do that first issuance on chain. Really interesting stuff. So people, should realize from this that you have a wealth of knowledge, having been in this space as early as you are, as a technologist that is working in finance, that Australian Bond Exchange is doing these innovative things, and we're very lucky to be working with you. But if people wanted to reach out, like I said, they might have ideas. Where are the best places to reach you? How does that?
So bondexchange.com.au is the best place. So again, we're on Twitter, we're on Facebook, we're on the usuals, but yeah, bondexchange.com.au is would be the central place.
I was going to say it's impressive that you guys are on Twitter, because I don't see enough, and maybe it's changing because we're getting into the crypto world, but it's always hard to tag groups that are just not on Twitter. Easy on LinkedIn. When they're not on Twitter, you just have to kind of name it out, but you guys are and have been, whether it's not centralized, like doing stuff for Redbelly, etc. So really great stuff. I hope people reach out, they're inspired by this and think of like great ideas. I know that the community is already rallying around what they can do with a lot of these ideas and pulling together some insights there. So we'll share that with you. We'll get people reaching out. And for now, Mike,